In the equities quadrant today, taking a look at the worst performer of the big four futures indices, the Dow Jones Industrial Average, which finished today, we'll call it flat. It was slightly below, it was slightly above. You're talking about 0.03%. So we're going to call it flat on the day, right at that 34,250 level. 34,343 was the high, up 0.25% on the day. 33,984 down below that 34,000 level, down 80 basis points was the low. A decent comeback from those lows. But at the midway point, we are working on the fifth straight down, I shouldn't say straight, the fifth down week in the last 7. They're not consecutive. As a matter of fact, it's been 1 up, 1 down. It's just dominated by the down weeks. 5 out of the last 7 will have been down, and we're at the midway point of this week. Banking stocks is really what dragged the Dow down. As I mentioned, it was the worst performer amongst the S&P, the NASDAQ, the Russell, and the Dow. Banking stocks were lower, but despite strong earnings, they remained lower. There was weakness in the overall sector. The XLE, the banking ETF, was down. JP Morgan down over 2%, even though they beat on basically all metrics when they released their earnings this morning. Tomorrow morning, we've got Bank of America, Citigroup, Wells Fargo, Morgan Stanley, some more bank earnings to look at. But if today's any indication, a beat won't necessarily help the stock. We also had CPI this morning, and CPI was benign. Basically, the month-over-month data, core and headline came in as expected. Year-over-year data, core and headline came in 1/10 higher than expected. Not enough to spook interest rates higher, which of course is good for banks. But not only that, the yield curve itself again flattened. So rates were a little bit lower by about 2 or 3 basis points, and the yield curve stayed flat. That's what hurt the banking stocks, and that's really what held the Dow back today.